So what do you get when the world's two biggest economies call a truce, but traders are still keeping one eye on the Fed and the other on the Washington shutdown drama? Well, you get a market walking a tightrope, balanced, nervous, and maybe just one headline away from a cartwheel. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I unpack the biggest movers across currencies, commodities, and indices, blending fundamentals, technicals, and just the right amount of common sense. Because let's face it, markets don't always make sense. And if you find value in these updates, please remember to smash that like button, subscribe, and turn on the notification bell so you never miss the next market breakdown right here on the ATFX Africa YouTube channel. With that being said, let's kick things off today with currencies. The USD CHF pair is holding around 0.8045, slightly off its recent 2-week highs. The greenback also remains supported by last week's Fed rate cut of 25 basis points, paired with Powell's cautious tone. A subtle reminder that December's move isn't guaranteed. The US-China truce over the weekend has added another layer of optimism. Washington paused planned tariffs and Beijing reciprocated by halting rare earth export restrictions and easing investigations into US semiconductor firms. That alone gave traders a sense of, wait, maybe the world isn't ending after all. Meanwhile, the Swiss National Bank continues to play the role of the most patient central bank on the planet, maintaining its expansive policy stance. The Swiss National Bank board has even left the door open to introducing negative rates if needed. Talk about commitment to dovishness. The currency pair remains supported above that 0.8 level, with the next resistance zone around 0.807. A break higher could invite another test towards 0.8165, while a drop below 0.8 might see the pair cool off towards 0.796. Overall, the tone remains, cautiously bullish, like a tightrope walker with one foot on Powell's speech and the other on the Swiss National Bank's next comment. Moving over to commodities, silver steadied near $48.80 per ounce this morning after a roller coaster week last week. The Fed's rate cut initially fueled gains, but Powell's "don't get too excited" message cooled momentum very quickly. Add to that improving US-China relations and, safe haven demand took a bit of a backseat. But just when traders thought silver was going to take a nap, China's manufacturing PMI slipped to 50.6, sparking a flicker of safe haven buying once again. On top of that, reports suggested that President Trump plans to block China from accessing NVIDIA's top-end chips, a move that could reignite trade tension, or specifically tech tension, faster than you can say semiconductor. And, let's not forget the ongoing US shutdown, now in its 6th week, the kind of uncertainty that usually keeps metals like silver on the radar for cautious investors. Looking at the chart, silver faces resistance around $49.50 an ounce, while support is seen near $47.60. A clean breakout above $49.50 could open the path to retesting $50.60, or maybe even the recent record highs near $54. While a drop below $47.60 might trigger short-term correction towards that $46 level. Right now, however, silver feels like it's waiting for, the next headline. Half safe haven, half industrial metal, And well, at this point in stage, entirely unpredictable. Looking at indices, the Nasdaq 100 kicked off November on a positive note, trading near 25,970, up almost 0.5% on the day. After 7 straight months of gains, the tech-heavy index seems to be saying, who needs a rest when you've got AI? Last month's rally was fueled by strong earnings from Amazon, Microsoft, Alphabet, and Meta, plus continued excitement around artificial intelligence. Add in a dose of easing trade tension, and well, the bulls found plenty to cheer about. Still, the ongoing US government shutdown could muddy the data picture, with key reports like our jobs numbers, which is NFP, still on hold. Traders might find themselves navigating blindfolded this week. However, I'm going to do my best to keep that from happening. So on Wednesday, I'll be hosting a live where we will be having a look at the ADP non-farm payroll results, which is the private sector. So at least we'll have some jobs data to guide us through this week. So please come and join me for that live session. Looking at the charts, the index has found solid support around 25,700 with resistance seen at 26,100. A break above the zone could reignite momentum towards 26,500, while a pullback below 25,700 might signal short-term consolidation, with a potential retest of the support zone around 25,200. That being said, momentum remains on the bulls' side. But as we've learned before, when sentiment gets too comfortable, that's often when markets will throw a curveball. So as we step into a new trading week, a new trading month, we are currently still seeing the dollar flexing, silver's hedging, and well, Nasdaq is still riding the AI trade. But with Fed speakers lined up and private data releases due midweek, one question remains. Will the calm hold? Or are we one data miss away from another bout of market turbulence? Either way, I'll have it covered for you here tomorrow. And with that, we wrap up your daily market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description and we'll go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.